Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I hear you loud and clear, Coach Jay. Welcome everybody to FOMC Wednesday.
Yes, it is FOMC Wednesday, Meta Microsoft Wednesday. Tatted Groove, you saw it in the chat. I was calling for all-time highs. I just ran out of time. We just made new all-time highs in the NASDAQ off of that. The earnings, off of Microsoft earnings. We'll talk about that. But welcome everyone to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. I'm Coach Jay, trading here at Topstep for a little while, coaching for about 2 years, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experience, perhaps some knowledge, and hopefully help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. We'll get right into these earnings. There's a lot going on today, but of course, these earnings just came out. So why don't we take a look at those first? Who do we have reporting? We had Microsoft, Qualcomm, Meta, Ford, eBay. Of course, we want to focus on Microsoft and Meta because those are some of the more heavier weighted companies in the equity markets that we trade every day. Microsoft earnings per share came in at $3.65. Estimate was $3.37. Revenues came in at 76.44 billion. Estimate was 73.89. Looks like they beat expectations on cloud revenue, which is pretty good. Here we go with Meta numbers. Earnings per share came in at $7.14. Estimate was $5.89. Revenues
Wow.
came, yeah. Revenues came in at 47.52 billion. Estimate was 44.83 billion. Meta's doing amazing right now, based on these numbers. Operating income is at 20 billion, 20.44 billion. Estimate was 17.24. Looking good. Meta headcount, a boost of 7% year over year as far as employment goes. So it sounds like they're doing great over there. Ford, always got to shout out Ford. My first car that I ever purchased for myself was a Ford. Came in at 37 cents. Estimate was 33 cents. Not a stock that I would buy for growth purposes, but shout out to Ford. Good American company right there. Anything you got on these earnings, Coach Paul? These are all pretty good
Well,
looking numbers.
the Meta earnings were insane.
Yeah.
They good. Maybe Zuck can add to his Hawaiian compound. But those were really good numbers. And boy, we see NASDAQ is poised to rally and make new all-time highs in short order here. Microsoft also. I mean, these are all good earnings all the way around.
Great earnings
Um,
all the way around. We see Microsoft currently trading. Actually, let's go to trading hours here because Microsoft is trading way higher than that. Trading $546 right now. Is that an all-time high in Microsoft? It definitely is.
I think
Uh,
so.
we closed right at $513, so up about $30 after the close on those earnings. Let's take a look at Meta really quick. And again, why do we focus on these companies? It's because they are the components that make up the equity markets that we trade. So as you know, some of these Mag 7 companies, Nvidia, as they go, the equities are going to go as well. Meta currently trading $747. That is a new all-time high in Meta as well, and it looks like it's continuing to go. 764 right now, 765, and continuing to rally. So really good earnings here. I think this is kind of just going with the theme of a great earning season that we've seen. We saw it start with the banks and now getting into the tech companies. Of course, Super Bowl is going to be that Nvidia earnings whenever they do come out. I got to get the date for that. Maybe set up a little party because Nvidia is another one that is just extremely strong right now, and markets are meant to go up.
And they just made all-time highs as you were speaking.
Yeah,
And it looks like it's a runaway now.
it is running. It is running. All right. Let's go back over anything else you want to talk about with these earnings reports, Coach Paul.
I think we covered it for as much as it needs to be covered. Good earnings, new highs.
New highs. We'll see. Of course, there's a lower liquidity time that we're trading right now. A lot of people are locked out of trading accounts or whatever it is at this time. So we'll see if these moves hold going into Globex Open and into the New York session tomorrow. But a very positive response right now from these earnings. Meta's up almost 10% in 15 minutes. So really, really nice move there. All right, let's get back into the futures that we trade every day. We did also have some other news come out today, Coach Paul. There was a Fed rate decision today. They chose to keep rates the same.
Oh yeah, that's right.
Oh yeah, about that. Which was to be expected. The Fed did keep rates the same. We heard a press conference from Chair Powell, maybe seeming like there is going to be a rate cut come October. The president is putting some pressure on Powell to cut rates. Anything you want to report on from that Fed rate decision, Coach Paul?
Well, it was interesting how the market broke when after it came out and Chair Powell was talking. But what I find it interesting is the equity markets are the energy of the equity markets are earnings.
Yep.
That you either have earnings or you get a beating. If you get the earnings, you get rewarded, and then these we just saw it just now. I mean, within 10 minutes, um, an explosion.
Yeah.
It was interesting that you know Chair Powell is, I mean, he's a pretty steady guy. Um, but his, as he talked, the market was breaking kind of hard.
Yeah, it was.
But as we talk, I mean, stocks are meant to go up, and they're doing their job as we speak.
Yes, they are. We did have ton of news out this week. We did have a GDP number come out as well. GDP quarter over quarter advance came in at 3%. Forecast was 2.6. ADP employment change came in at 104,000. Forecast was 75.5. So good sign for the labor market there from that ADP number. We do have some more numbers tomorrow. Of course, we got jobless claims. We still have PCE out tomorrow. Apple and Amazon after the close. So this week is not over. We saw some consolidation early on the week. We're going to get to the charts in a minute, but we saw some consolidation early in the week, and we said there's potential for explosive moves out of this market. We just saw S&P and NASDAQ both make new all-time highs, and still some data on the calendar, potential catalysts for more movement here. All right, let's take a look at the quote board. There are 35 different markets we can trade with Topstep. Today to the downside, we had natural gas down 3.66%. Platinum down 7.2%, and copper, our biggest percentage mover to the downside, at 19.17%. News on copper was tariff news on copper. Anytime the T word pops up in any of these markets, there's potential for insane volatility. Copper went limit down. What does that mean? Market was selling off. And Coach Paul, talk to us a little bit about limit down. What happens when a market goes limit down with orders? What can traders do in that time? Because we did see the markets halt for a little bit.
Well, the limits are in place to stop out of control movement. They rarely get hit, and when they do, what happens is trading. In this case, it stops trading when it got. I don't know what the percent. It's a percentage now.
Yeah,
I mean, what was it? It was down. I saw
it was,
20%.
down about 20%. Yeah, on that limit down.
I can tell you this: by that time, any of the accounts we have here, if you're long, you're
Say bye.
done.
Yeah,
Even if you have a stop, I don't see it's. So what happens? Limit down, only orders to sell, and there's no buying. So it stops for, I think, 3 minutes now. They changed the rules a
yeah.
bit. and it's to cool down the action. So only in this case, there's only sell orders.
Mhm.
There's no buy orders. It's not trading. It's offered.
Right.
It's a it becomes illiquid, and they stop trading to try and tamp down. It's like an engine overheating. Um, but it went after it opened. We had that pop again, only to find more sellers. Um,
This
it
move.
will.
Go ahead, coach.
It's weird how they stopped it for a amount of time. If I was the king, I would have kept it the way it was. Um,
Mm.
at a percentage, if it doesn't, if it's going to recover, buyers will come in at that price. You understand what I mean? I mean, if it's limit down, and let's say there's 1,000 contracts offered at limit down, and the cash market could keep going. And there's ways, I don't want to get too deep into this, that you can trade options to see the price. But at that point right there, if that's, I believe that if there's 1,000 offer, good, let it stay there. If it'll cool down when the market closes,
Yeah.
and they let it go and it popped up, only to come right back
Right
down.
back down.
What a move!
So, from my understanding, you're able to buy here, but you're not able to sell. Continue selling.
You are not able to sell because everyone's selling.
Correct.
It's all sell orders. There's no buying on the other side.
This
Um,
move in copper, high to low, was about a $25,000 move with a one lot. In That's a 3 minute candle. We can take a look at it on a 1 minute candle.
it's a
We can see the gap where it didn't even trade a couple prices. Uh, we a lot of the conversation on Topstep TV recently has been slippage and things like that. There was at any point I saw a 30 tick spread in copper. You want to talk about slippage? This is not a market to try to play around in once you see something like this, because you did have the option to buy it if you wanted to. And this bounce alone was a $12,000 bounce with a one lot. You could trade micros. Coach Paul just said if anyone was long in copper, you probably lost your account or hit a daily loss limit, even if you had a stop in. And that's just, we don't get to control that, right? We get to put in our stops, but sometimes shit like this is going to happen. Now, for me, my approach, are we going to get news like this in copper every day? No. Is it a good trading market? It is. But with something like this, and we've seen a couple of days with these type of moves, I might pump the brakes on trading copper, if not only trading micros, because this is an account blower right here.
well, here's the danger of it in the environment we're in.
Yep.
The instant execution and random tweets on basically opinion. It's very dangerous. In my 40 years, I've never seen anything like this. You can have moves that come out of news, but just that literally a tweet is an opinion,
Yeah.
and um, it gives me pause and concern that, I mean, this is markets are not designed for this, and we're seeing it.
Yep.
Um, if I'm a commercial, but by the way, they're not here, but markets aren't here for us to make money. That's not the hierarchy of needs. Yes, we supply as speculators a function, but can you imagine being a end user or a producer? This kind of volatility, it
Insanity.
makes it hard
How
to
do you run
do
your business?
business.
How do you run your business?
Yeah, it'd be 20% swing in a minute
Yeah.
because someone said, I'm going to put tariffs and now I'm going to take them off. Well, unless he called you before and you could do something, I mean, it's horrible to me. And I'll just get off my pulpit, but I wouldn't trade. I won't trade. I haven't.
Yeah.
Copper is notoriously whippy like this, and well, we saw it to an extreme today.
Absolutely. To the upside today, we had cattle up 1.42%, RBOB gasoline futures up 1.53, crude oil again 4 days in a row now in our top percentage movers, either to the upside or the downside. 3 days to the upside, crude up 1.66%, trading above that $70 level for the first time since that big sell-off. We have the S&P up 0.43%, gold down 1.67%. We did roll over and we're trading the December contract in gold now, and the NASDAQ up 1% right now. We know obviously most of that move came from the reaction to the Meta and Microsoft earnings. Let's take a look at the NASDAQ chart. I'm on a daily, Coach Paul. It's funny, we usually, review and recap what happened in the day's price action, but when we look at the daily, that reaction to earnings just erased everything that happened on the day.
Yes. And we had a chance for a 3-bar reversal, but we're talking about waiting for the close. So even now, the close here, it includes activity after 3 o'clock,
Yep.
right? After your cash market closes. So this doesn't give us settlement, it gives us the close. And this close is very bullish. When we've talked over, there's nothing here to indicate this market is done. And onward and upward gets to be boring. I mean, we see this all the time. I mean, stocks are designed to go up and they keep going up, but man, what a rally after the close. Let's go. You want to go into the half hour?
Let's take a look at the half an hour. And prior to that explosion from the tariffs, it was pretty much what you would expect from a Fed day. We talked yesterday about being near this 200 moving average on the 30-minute, which was down around 23. Is that the right date? It is. It was down around 23,450 to open Globex. We did have a decent move to the upside last night. But again, how directional were we going to get before a potential decision by the Fed that was not an unchanged rate? How directional were we really going to get? We came down, we checked this Globex open a couple of times. It did set the low for the day until the Fed, so it gave you an opportunity to buy off this range. But is this anything different than what you would have expected a pre-Fed decision to look like, Coach Paul?
Well, that's why don't trade in front of it. I didn't trade today, and I'm glad.
Yeah.
Now, that's for my style, but look at that half hour. I mean, it was just it looked like it was the end of the world.
Yeah.
That seems like a long time ago. That was an hour ago.
We came up and
Um,
we tested the candle. This is the 30-minute candle that made the prior all-time high. And initially, it looked like we were going to just rally. And as soon as that press conference started, something hit the tape. Sellers came in.
sellers came in, talk, but it gets thins out. I think markets can be exaggerated under this, and we saw that. Is there anything in the testimony that I didn't hear that was bearish?
No.
He's, he talks like a banker. Yeah,
Right.
I steady and not emotional, like I want my banker to be. But I didn't see any reason. It was decent volume too on the break. Now, what we had before this big rally here was a J trade on the half hour.
Had it on the 3-minute too, but go ahead. Where were we on the half hour?
Wait a minute.
Right here.
That
Yeah.
was the same thing.
Nope.
Yeah. J trades all around.
All around, man. I know Mandy was getting long. I know the house account was getting long as well, and I was semi joking about all-time highs for the trade that they were in. It didn't happen before the close, but with Meta, Microsoft, and just the way that these earnings have been going, the way that this market has been in buy the dip mode, I'm not surprised now. Ooh, cool. You're the guy that called it out. Did you trade it? I didn't. I stayed flat, but really nice move here, and it, leaves me optimistic going into the rest of the week for what we have to trade. Coach Paul, you're talking about this J trade here on the 30-minute chart. The high of that candle was 23,469 half, or 23,468 was the high of that candle there. If we zoom in just a little bit, there was a 3-minute candle that gave us some decent volume at that low. And just drill this in a little bit more. 23,422. That candle, this 3-minute candle here, was the highest volume candle that we had all day. I did take a long here. My Topstep account was locked out. I did take it in a personal account just for a quick scalp. In hindsight, I should have held that. But once we closed above this, it was a decent trade. Now, the volatility is still there, but I think this is why we say technical approach to a fundamentally driven market. This setup, I don't care what the news is. I want to take the trade because I can put risk behind this. Now, my risk, where is it going to go? It's going to go below the low of this candle, which is a pretty wide stop, about 70 points. But we can see, even in fundamentally driven markets where headlines are coming out, there's press conferences, thin markets, the pattern still holds, right? So once we closed above this 422 area, comfortable taking the long. I actually took it a little bit before I waited. I preempted this trade. I'm human.
I'm
What
not
do you
laughing at you.
expect? Uh,
I'm working on not preempting it. I know your pain.
but really nice rally from there. And part of the reason I was looking for, so just put the full puzzle together, was that all-time high call at the time we were 200 points lower than the all-time high, 300 points lower than the all-time high. Was that really out of the question? The picture that we had here on these lows, we had a ton of negative delta, right? We hear Hogue talk about delta all the time. Him and Andre are calling out these delta readings. Going into the last 10 minutes of the day, the delta in the NASDAQ was negative 4,500 contracts. And we weren't making new lows, and we had this J trade pattern. So, what does that mean, Coach Paul? Negative 4,500 delta into the close.
So negative 4,500. There was the measure of delta is urgency. So it's I wish, like I said, if I came up with it, I'd call it an imbalance. There's a better name for it than delta. Maybe because I spent a lot of time in options. But the idea is an imbalance. So we have 4,500 urgent sellers. And you mentioned that they weren't getting anything for what? Was that about an hour and a half?
About an hour. About an hour. Yeah, about an
Yeah.
hour. They didn't get anything.
So when we talk about a J trade, we had a large selling at the bottom. This isn't exact, but we had big buying off of that. On the half hour, we had a delta imbalance that was negative. So with negative, there was more selling. An imbalance of sellers were urgently hitting the bid. This wasn't like versus a resting order. I mean, and they were looking good,
Oh
right?
yeah, for a while. Yeah, through all of this, they were looking great.
I mean,
But what has
I'm
been the theme for this market? Dips are to be bought.
good to buy the dip.
Dips are to be bought.
Um,
Even I mean, can we call 200 points at 225 points a dip on a
yeah,
crazy volatility
yeah.
day? Yes, but we could see, sellers are just not getting long-term traction control of this market, right? In a short time frame, they can off of some volatility, but there is a consistent bid in this market.
How much time have the Bears had control of the market? Well, in this one, about a half an hour.
Half an hour.
Half an hour.
I mean,
So I
shit,
know a
if I
lot
can
of
make 200 points in a half an hour,
we don't talk about time a lot, but there is a principle. Whoever can hold it the longest wins. Cost of carry, it's called. And in stocks, it's really apparent, buy and die. buy and hold. It works, but we're not investors. We're traders. And in this situation, that's where a trend comes in. Buy the dip, and we saw that there. We talked about that large in delta imbalance. So now I've been here, so I can talk about it. It's getting short in the hole
Oh yeah.
with everyone else.
Yep.
And it looks at that time, if we move that to the right when we were making lows,
Oh, we're going to zero.
I'm good. We're going to zero. I knew this was going to happen. Sell more.
Mm-hmm.
I think it's going to be down like copper and this is our subconscious minds talking. And and you're right, you got a winner. And now everyone else is short. We talk about is short with this or 1500. I'm feeling good. Now we move next. What happens? We had some buying. I'm still in that looks good. But we'll talk about here. There's the close above that high volume. Something changed. Neither the sellers selling stopped. Like I said, Peter Stottlemyre, one of the last lessons he gave me too, said to me, instead of try to find out where the last buyer comes in a rally or the last seller in a break. And that's all he told me. I'm like, oh, yeah, okay. But here we have an idea. We have the large selling, big movement. And where's the J trade? What is it? A hammer candle
Yeah.
on the bottom
Yep. Hammer
with the
candle.
highest volume of the day. I think that was even higher than
Higher than the open. Yep. 100%.
higher than the open.
That's a
I
sign.
just now
That's a sign.
it's a sign that most likely those are resting orders. And those are resting orders by institutions, not by Joe Willie One Lot. And I'm not insulting it because I am one of them. I'm a one lot trader in
Right.
many different places.
Yep.
But
But you
we
know when to
got
take that one lot and
information
go
on
home.
it. Yeah. Now, when we settle above that, and we close, and I use the word settle because I've been around like close. We have a candle close above that. That's done. If I'm short, I'm done. In other words, the last seller came in here, and it was big volume, and then it goes sideways. And then the news, the most important news is earnings. And boy, guess who? A lot of that buying might have been the people who were short.
Oh yeah. Great bad sellers become amazing buyers at all-time highs when we get blow off top earnings in the heaviest weighted companies in the equities. They become great buyers.
Yeah, and they're urgent because like I said, I was going back. I've been in this situation. Then you give it a little more time and a little more. Now your profit starts going to zero, and you're frozen, and you feel like someone, like a kid you just grabbed the candy bar out of his hands, and you might even pout or scream or yell at the market or freeze, and all of a sudden you have to get out
Yep.
because you lost and you lost more than you could afford. That's what that all looked like. If you're new to trading, don't trade FOMC. Take the day off. That's my
Watch the
advice.
fireworks. Watch
Watch
the
them.
fireworks.
So that's all I have on NASDAQ. What else do we have?
So I misspoke. I thought the S&Ps made new all-time highs on those earnings, and they didn't. So a little bit of a divergence here. The S&Ps did not make new all-time high. That all-time high still sits up at 64.5775. I think we spent a lot of time on the equities. Unless there's anything specific you want to talk about, Coach Paul.
Well, I always like to check Russell.
Also, just take a look real quick at where the S&P is in relation to that 200 moving average at 64.21. We did close above it after those earnings, but still some decisions to make here in the S&P. All right, let's take a look at the Rusty. Man,
That's a horse of a different color. What the heck?
yeah,
Down right there at the 200, and that did not recover. So and then this is further evidence that this is a tech-driven market. If you're not in tech and you're not getting earnings, you get no respect. Wow, what a difference. Um, Now there's a 3-bar reversal that's holding. We're under the 20. We're at the 200. We did not recover.
yep.
Hmm.
And that 200 moving average on the 30-minute. I wasn't looking at this market, but damn, what an area of rejection right there. Some beautiful selling came in there. I know the house account did take a trade in the S&P early, just kind of fading the upper extreme of the initial balance. Again, initial balance is the first hour of trade in the markets that we trade. And it looks like that's kind of what the Russell did as well. We never really left that initial balance to the upside. Here is that range there. Price left, priced out Coach Paul, but we did not volume out. Volume failed to
No.
find any
That
buying up above here.
No, that's the over. That's 2,000 stocks. Now,
Yeah.
can that divergence continue? Is what I'm thinking. That's a big divergence. What I mean is, how can the the overall market is not healthy,
Mm.
but the tech, the seven
Tech runs the world.
runs the world, and if you're not in tech, I don't know. I look at that. That is something to be watched. And we will continue to watch it. But wow, that's not a healthy chart.
No, not at all. Not at all. Ending on the lows as well. Ending the day on the lows. That 20-day moving average and the Russell's at 22.16 half. The Russell down 1.19%. Again, one of the top percentage movers in the equities. I think it was a top percentage mover in the equities today. All right, let's take a look at gold. Equities are rallying. Coach Paul, did they finally do it? Did they finally break gold?
We saw that trend line. Um, we closed below it. Go down a little more. Either way, it was broke. It was broke. Settled below it. We didn't. This is ugly. I think we're going down on the 200. We saw how copper went down 20%. Platinum was down 11%. These were supposed to play catch up. This market looks to me on good volume. And when we're talking, this is liquidation.
Yep.
I call it, maybe it's we'll have to ask Hogue about an open interest. I heard him talking earlier today. It was kind of hard because we're in a roll. Roll or not, the market in commodities follows the cash market. And we're talking, things changed about a month ago. We didn't get the Asian buying. Matter of fact, they're selling in Asia. And now this is lows of the move. We've broken the uptrend. The 20 is under the 50. I think this is going to pick up momentum to the downside and go test the 200 personally.
200 daily moving average is down at 31.2310 currently. So how much percentage wise is that? It's about a 6% move in gold. We have been seeing some pretty nice movement in gold, down 1.5% today. So I don't think we're far off, Coach Paul. I do not think we're far off at all. Let's take a look at the half an hour on gold. Take a look at last night's open. This was pretty much a sell all day. The Globex opening range set pretty damn close to the high of the range. Of course, this market didn't really start going until some of the 7:30 Central Time numbers that we had come out. Overnight session was pretty quiet. to be expected on days like today where we have so much data out during the New York session. We can see any of these breakouts last night. These are just false, in my opinion, just my analysis, false signals for breakouts. Oh, gold is going, gold is going. We see it in the slow markets chat all the time. Hey guys, stop chatting, stop talking about Dakota's dating life. Gold's breaking out, and it's like on a higher time frame, it's really not going anywhere. And you know, we really didn't see that volatility pick up during the Asian session, where we see that volume come in. Market looked like it was waiting for those 7:30 numbers, and once they came out, we really got going. Let's take a look at the 1 minute opening range trade. I do not believe we took it today, or did we? Somebody remind me. All these days kind of blur together. I think we did take it actually. I think the house did take
I
this
don't think
trade.
you did.
I think we did. I
Did
think we did because it turned out to be a quick loser. Turned out to be a quick loser. Opening range, 1 minute opening range breakout was initially to the upside. Yes, we did take it because I remember Hogue saying he didn't really love it, and maybe for good reason with those numbers coming out as well. 7:30 numbers right here, that candle, and we sold from there. Yeah, gold is being sold right now while the equities are being bought. Maybe we're moving some profits over from gold that we had for 2 years and buying the equities for the next amazing bull run. But this was would you call this a liquidation move, Coach Paul?
I absolutely. Um, it's when I see stuff, I'm just the vision being a pit. You know, it's the big broker in the pit who's representing the customer base keeps turning around, and you bought 10 from them and keep selling 100 more, and you turn around to get out of your 10 and everybody else is selling. It's relentless. That's liquidation. As you can see, look at VWAP. Yeah, and it happened all day long. I mean, I think it started in Europe once again.
Yeah,
Um, that is absolutely liquidation. And then liquidation, like with you could see what we saw in copper. You could see this in gold. Like, I'm not saying it's going to happen, but you could see when it's down $250.
yep,
Um, everyone heads for the exit, the crowded theater effect, and this is a bit of that. Like, it just that's why I call it liquidation. We see it
absolutely.
in the 200. We saw it in the VWAP. Wow.
On it. Want to shout out. We got 776 people watching right now. Want to thank you all for joining. If whether you're a new viewer, old time viewer, you've been with us from the start, from the Discord days. We want to appreciate everyone that's here today. Thank you guys for joining. If you can do us a favor, hit that thumbs up button. Also, we do have the 1 year anniversary of At the Buzzer on YouTube coming up in a couple of weeks. Hint, hint. Uh,
Time flies when
I
you're
might
having
I might
fun.
get myself in trouble on that day, but sometimes trouble is good. Uh,
There's good trouble and there's bad trouble.
sometimes trouble is good, and that's all I'll give you for that. All right. Anything else you have on gold, Coach Paul?
That's it. Let's see if it continues tomorrow. I have a feeling it will. But that's just me. Let's move on.
All right, we got a couple questions in the chat here. One from Dominic. Could you explain liquidation? Do you mean the sellers are liquidating their position and it drove price up? In this case, the liquidation is to the downside, Dominic. What it looks like is there were more aggressive sellers than buyers in this market. Hogue is going to give us the open interest numbers tomorrow. So we'll see whether or not these were new shorts coming into the market or longs liquidating their position. But either way, there are more aggressive sell orders in this market. And I think why we're calling it liquidation is because of how this market has been holding up over the past 100 days. Has it been 100 days since that all time high? I'm supposed to be
It's
counting.
almost
99. Tomorrow would make
9.
100. Uh,
Good enough for government work.
But for how long this market has been holding up in this uptrend and now starting to break, some longer time frame market participants may be getting out of positions up here. Again, that's a little bit of theory, uh, but we'll see in the open interest numbers tomorrow. But I agree with you there. Well, we also had another question from uh, Original Jeffy.
One other thing,
Go ahead.
when I'm talking about liquidating, they're liquidating their positions. This market has been dominated at all-time highs 100 days ago. It's still in an uptrend. And so what I mean by liquidation is the longs are starting to take profit on a longer term point of view.
Yep. All right. Original Jeffy had a question. I saw Coach Ray in the chat answered that as well. But you said, I did my analysis this morning. I bought S&P at 64.12. Let's take a look at the S&P 64.12. And Jeff, I'm going to ask you a question. You bought the S&P at 64.12 today, right? Good analysis. Do your analysis the same way every time. What is something that you could add to your analysis today that may have been a potential catalyst for this trade not working out in the time frame that you were looking for it to work out in? Because you said after MOC it worked out. In your opinion, should we only trade after MOC? My opinion is going to be no to that. Only trading after MOC. I mean, unless you have a strategy for it. But waiting till the end of the day if you have the numbers and the numbers work out, do whatever you want. Don't let me tell you no. But that's not going to be my suggestion. But what was a potential catalyst for 64.12 to really not work out all day until the close? George says VWAP. That's one of
Of
them.
course, George.
Let me just throw a VWAP out there.
And
That might be the right answer. And you're not wrong, George. Look at how
yeah,
flat that VWAP was, right? We really didn't go anywhere. But Jeff, remember, part of the analysis, and maybe you don't trade the fundamentals. I don't either. But I have to be aware of the effect that fundamentals might have on the markets that I trade. We had a Fed rate decision today. So look at when the markets really started moving. It wasn't until that press conference. Everything before this was chop. It was chop, it was range. So I don't know what your expectations were for the outcome of that trade, but this price action where we got at most 12 points away from where your level was, that price action was because of that Fed rate decision, right? So keep that in mind. When we're looking at these markets, there are fundamental factors that could affect price. Anything else you got on that, Coach Paul?
that's it. I don't.
Take a
Well
look
done.
at crude oil. Sneaky crude. Sneaky crude. Uh,
He's good.
4 days in a row,
Something's
one of
going
the
on.
it was, yeah, it is 4 days in a row, one of the best trades for the day. What are we seeing in crude on this daily, Coach Paul?
We're starting to curl. Let's measure that fat $7 candle again and then see what
It was
halfway.
$12.
Oh, it was $12.
$12.
Oh, it was down $7 on the day after it was $5 higher, something like
Yeah,
that.
something crazy.
Okay. We're almost halfway back. But here we curled, we held at 200. 1, 2, 3, 4 days of buying. It seems to me short covering. I don't think we're out of the woods yet on the downside, but man, what a rally. Let's look at the half hour.
Let's take a look on the half an hour chart in crude. I'm going to mark off. Okay, so 50% of that high volume candle, that downside candle was 71, it is 71.20. That looks
Yeah.
like a really great target for tomorrow. But that is not financial advice. I'm just looking at the charts.
Okay. Nothing happened in Asia as usual. Wait for London to open for me.
Here's the London Open. Pretty much the same range. London Open and the London volume was a little bit off. Looks like the volume came in about a half hour later. But here is the London Open.
All right. Wow. We had a looks to me like the short covering rally.
Yeah.
London is usually pretty good. And we had a turnaround. I don't know what it is. is there a war brewing in an oil producing nation, or is it just short covering pressure? It's ironic that it's happening with metals getting crushed.
Mm.
Um,
Why do you say
but
that, Coach Paul?
well, inflation. What's the leading component in inflation? And they don't keep it in a lot of the data because food and energy are too volatile. I won't go into a rant about that. I mean, if I can't eat and I can't heat my home, what do I need anything else for?
Right.
But um, that the fact, usually they run in tandem as a commodity. Crude's rallying, gold is going up, and metals. We're not seeing that. This is a classic. I think it's a short squeeze, or larger producers are lifting their short hedges. But ironically, there it's diverging from the metals and having a nice rally. Whether that's economic reasons, I don't know. But still being above the 200-day moving average. The idea that I see is buying the dip. Where does it show that it was a good place to buy the dip? And I'll leave that to you.
So we got a couple places to look here. We talked. Hogan and I were actually talking about this morning, during the opening call. But we have on the 30-minute chart, this purple line right here is the 50 moving average. We have that area. You guys know how I like to frame out my charts, and if this was just a naked chart with just volume, I'm looking at where the high volume came in on whatever time frame I'm trading, right? And we see how often the market either respects that volume or trades back to 50% of it. We did it here. This was a couple days ago where volume took a little bit longer to leave that range. Same thing here. Frame out that high volume. We talked about this during the opening call, and I asked Hogue, because we were coming in. Here's the opening candle here, right? We're talking about opening call right around here. I had asked Hogue, because we already got this pullback to this 50%, do we look at this as a satisfied pullback? Now, this is going to show up a couple of different ways depending on how you look at the markets. If you're a TPO market profile trader, this is going to look like single prints, right? So what I asked Hogue was, is this enough of a pullback in those single prints to look for a push in the opposite direction? He said half back is a great spot to look. We've detailed it, I don't know how many times on this session, that the market loves that area. Really nice pullback there, and we rally. Now, I have not been able to bring myself to trade crude oil, but this pattern, wherever it shows up, should be a signal that something has the potential to happen here. Let's take a look at the 1 minute opening range, which I think triggered a short today. Uh, the house did take that trade. But with that, and I think so. Here's the thing about that 1 minute opening range trade. It's a mechanical trade. You're just going to take it with no other information most of the time, taking it based on whatever the market presents, and not overthinking it. But being a being a little bit of an overthinker here, I like to say whether or not this trade fits the overall structure I'm looking for in the market. I don't love this short with this pullback already being satisfied. At this point, this tells me that the market doesn't need to trade lower. So doesn't mean we need to go higher, but I'm not looking for it at this point to go lower. Now, that's me adding information into that trade. That might mean I take less trades. The one thing I really do love about that opening range trade that they take is risk is defined. It's never going to be an account blowing loss unless we over leverage, which we're not going to do. And I don't have to do that overthinking. But um, we had inventories out. Coach Ray was just saying, EIA today as well. Here's that EIA candle. What pattern do we have there? This is a 1 minute chart, but that's a J trade, right? EIA candle, close above it, we rally. A lot of times on EIA days when I was trading crude more often, I wouldn't take a trade until that print came out, because we know that that has the potential to increase the volatility in the market, and really nice rally off of that EIA number.
Yeah, and usually it doesn't do much in that. It used to be huge. Um, Either way, what with someone here said that there's talk about EU-Iran conflict. Um, Something's brewing, but we've seen this in crude. So how many times, Coach?
Too many.
Just, just when you think it's safe to get back in. Um, but um, that's it for I have for crude.
All right. A couple of questions that we have here in the chat. We got about 15 minutes left here. Actually, we started early. We can do whatever we want. We run the show. Uh, and we got over 120 likes, so we'll keep going as long as you guys have questions. So Genius Genie did point out EU Iran issue is cooking crude. I think EU put some sanctions on Iran. Iran made some threats back. I know the president was talking about a 25% tariff on India because India is continuing to buy oil from Russia. So there is some stuff brewing there for sure. Dominic has a question. Sorry, I'm not new to trading, but I'm new to Topstep. Can you quickly explain your parameters for the opening range trade? Uh, Good thing about this opening range trade, it's not a Topstep concept. It is a trade that is taken pretty much universally. But what we're looking at, Dominic, is in this case in crude oil, the 1 minute opening range. That opening is 9 a.m. Eastern time, 8 a.m. Central, and we're looking at the high and the low of that range. If the market breaks to the downside, take the short. If the market breaks to the upside, take the long. Risk usually goes on the other side of the opening range. And if you watch the opening call, which is 7:20 Central Time, we take that trade in gold, and then we take it at 8 a.m. Central Time in crude oil. The idea is, and Brad had a comment in the chat and said, if your bias is long, why would you take a short? What I really like about this trade is that it takes your bias and it says F your bias. Because how many times have we had
And
a
by the way,
how
here,
many times have we had a bias, Coach Ballin is wrong?
yeah, well, we can have a bias, and I would say this: what I do this in my own trading. Let's say I have a long bias and it's a sell.
Mhm.
I just don't take it. I only take the buys.
Right.
You could do it that way.
Good.
Um, there's many ways, but it's an idea. This is where it starts. And the large percentage of the time, what is it? Over 80% of the time, the highest volume is going to begin on it's going to be at the opening. It's important. So that's why that it brings a lot of interest. Like I said, if you're doing the opening range breakout and it's mechanical. So you can separate this if you don't have a bias. You're just looking for an opening range trade. And by the way, this is older than I am. That's pretty old. It's been around since trading began.
Right.
Um, it sets the tone. If there is an imbalance in the market, it's going to come from the opening range. That's when the big orders come in, and then if they're severely imbalanced, what I mean, if there was 500 more sellers than there were buyers, and it starts moving lower, it's got a high probability it's going to continue. And it's real simple. You know, it's the beauty of that is how simple it is that there's no thinking. I mean, it's mechanical. Some of the best traders I ever in the floor, that's all they did.
Yeah.
So it's a good question.
Good question. We have to do it, Coach Paul. I want to thank you again, my friend. The euro.
Yeah. Oh,
Uh,
by the way,
Go ahead.
yeah. Go ahead.
No, you
I'll
go.
say something. You know,
You go.
we just talked about gold,
Hmm.
and what we're not mentioning is the dollar is starting to get stronger just this week. When the consensus was the dollar was just going to continue to get weaker, and maybe be replaced by Bitcoin, right? That was the talk of the
Yeah.
town.
Yep.
It wasn't about the euro breaking hard. Now, the reason I liked selling the euro, and that was on my radar, is that big selling candle that went from the 20 to the 50 with without any major news on
Yeah.
big volume. That's the end of that's to me is the sign at end of a move. Because there was some news of an EU-US trade agreement. And then, okay,
Yes. Yes, there was.
okay. All I know is that was the biggest range we had. It took it from the 20-day moving average to the 50 and could not recover. And today, that's what I call liquidation of longs.
Yeah.
I look at, I was a CTA. I managed some fund business for years. And funds, they're not in and out on a day. Like, they don't have the mentality of a day trader. They're in for long periods of time. The longer, the better for them. But to have such a drastic move happen, because that day, if we let's look at the half-hour chart now.
Today or the initial sell-off day?
Yeah, since we got under the 200
So
moving average on
that was so we had
right
that
there,
gap up, got under the
which we
200
did.
here on that. Yeah.
Well, that was Sunday night, I believe.
Mhm.
So we have a gap up, and gets filled. Then we get under the 200 moving average, and that day it just leaked. It just that's look at that. That movement, there was that's hard to recover from. In the background of a longer term, we've been rallying, and the main consensus was it's going to go even higher.
Yeah.
That's bad buying. Or whatever it is, at that point, the game has changed here. It's like I'll give in poker. You see someone betting he's got a pair showing a pair of tens, and he's betting higher, raising it. All of a sudden, he passes.
Yeah.
You don't have the guess, but didn't get the card he wanted, and you might have a pair of jacks. Whatever it is, something changed by the way the market changed.
Yep.
That's and that comes, like I said, and when you see it, it's not something you can, I think, project it when it comes. It, and that changed, and you could see it.
We have
I could
3
feel it.
we have 3 days that took out almost 2 months of range. It's a huge move, right? Again, we were talking about a couple of weeks ago, Coach Paul, 2 months ago, you were talking about these are very bullish markets. And
Mhm.
right about it, right? That was the right call. But soon as that changes, and like you said, something changed, right? The buyers stopped betting, and like, okay, maybe I do have, you know, the best hand at the table, and they have to get out, especially these buyers. These buyers up here, they're going to be the first ones to go.
Yeah, the week. Now overall, this trend is still up, right? This could be a buy the dip. I'm gonna have to see some kind of structure. Basically, come down to the 200 moving average, hold, and have some kind of structure of a reversal. But why I saw that day out of nowhere, you see that kind of movement, and it's hard to recover from because everyone's in. Can this lead to a great buy? Absolutely.
Mhm.
One of the things I know is, but I had to come to the realization is I don't know. Because be when you feel you have to know, it's hard to take risk,
Agreed.
right? It's
Yep.
you don't have complete information. And this continue, yeah. Um, where's the 200 moving average?
On the daily, about another
Hmm,
3.5% lower.
yeah, that could go there. Or
Uh, my profits from today came from this euro trade. Again, I
no,
like
that's
I
good to
said it
hear.
yesterday. I am as much of a student during this at the buzzer segment as any of you are. We are all participants in the market, and we can learn from each other. I learned from Coach Paul that this is a decent opportunity from Coach Paul's scouting report to start the week, and I'm in a position where I'm not going to continue to ignore information. So
Well, I'm glad I could help.
I took the trade.
Um,
Uh,
eh,
Great call, Coach Paul. Great call.
thank you.
Uh,
Um,
so
you know it's interesting is all the currencies. Lost in all this other stuff is Japanese yen.
yep,
Look at that.
that's under the 200 daily moving average.
Yeah, and it's picking up momentum. Canadian dollar.
Very similar to the euro,
Yeah.
even weaker.
Now, can they settle? Can they, can they turn around? Absolutely. Like I said, I don't know the future. We trade in the present. Um, this could be a setup for a great buy. But look at this. The 20 is going to cross under the 50. It's, that's not a bullish setup.
Not at
Um,
all. All right, we got some questions here, Coach Paul. I'm also going to share something. Shout out to Dakota. You may have heard on Fast Markets this morning that Dakota is closing his live account and going back to the beginning. He's starting in some combines again. Going to go through that whole process. It's been clearly documented that Dakota had some struggles trading this year. I have as well. I mentioned it on the show a couple of times. But what we're doing as far as transparency goes, here is the link to my performance stats for this combine. This will be the only combine I trade going forward with Topstep accounts. So we either see it do well and turn into an XFA, potentially more, or lose it and add it to the combine counter that we're starting today. So if you want to bookmark that, I did also post that on X. I don't know if you guys are following me on X, so let me get the link to that as well.
get that up.
Give me 1 second. Here is and Coach Paul. Somebody asked, "Are you on Twitter?"
No, I'm not. I'm
He
thinking
said that
about
with
it.
a smile.
I
As he says that with a
don't.
smile.
Here's why. There's so much drama,
Mhm.
and I like the way you guys do it. And I'm real selective of who I follow. I don't.
Oh yeah.
I'm gonna go straight up. Save the drama for your mama. There's enough drama in trading, and so I'm thinking about it. But it will be if I do, it's going to be. I'm going to be boring.
Yeah.
Like good trading is boring.
Absolutely. Yeah,
And
I
I'm
try to
just
stay out of the drama as
and
much as possible. Yeah, I don't have time for that shit.
the negativity. When we do this here, we're just really trying to help. And like I love what you and Coach Dakota are doing, and this is very transparent. And by the way, when you're trading and you have great years, it's going to happen. Drawdowns come. They're going to happen, and you're most susceptible at the top for a lot of reasons.
Yep.
So I mean, I'm looking forward to that. Maybe to watch the progress, um, because you know versus, and I'm gonna come straight out right now and say it on X or Twitter or whatever you want to call it. th- There's I, I- I'm an older guy. Let your performance do your talking was what I was raised on.
Yeah.
And there's a lot of talk and smack talk. And to tell you the truth, I have no room for smack talk. take your energy, and I like what you guys are doing. We're going to show our performance.
Right.
I'm going to let the numbers do the talking. I think that X or Twitter needs more of that. So maybe I'll join you in that journey. I kind of like the idea. Let me mull it over.
All right. Awesome stuff. All right. Anything else on your scouting report, Coach Paul? Anything you have to want to say before we go? We're coming up on time here.
Wow.
We did have one more question for you also.
Um,
We had two more questions for
yes,
you actually.
let's get to the question.
All right, let's get to the questions. We got one from Adele Trader and then one from JD. Adele asks, Coach Paul, according to your experience, what's the percentage of intraday positions that close by the end of the day and the long-term positions holding for several days by institutional traders? That is a loaded question. What percentage of traders are day
Wow.
traders compared to the percentage of traders that are intraday traders or swing
Okay,
traders?
good question. Now, intraday traders provide liquidity, right? They're intraday traders like market makers or day traders. I don't know what it is percentage, but it's bigger than I believed. So I don't. Boy, that's a good question. I don't know. I've never asked it. My guess is intraday is a large majority of the volume on a day-to-day basis because they're trading in and out. A larger institutional or a fund type of trader is looking for a position hold. So they might not be involved for days on. If I have when I'm swing trading and I have a good position on, you won't see me. So
Yeah.
I'm going to go out on a limb and say 50% of the volume is day trading, short-term trading on any given day. And if someone finds it out, let us know. I'm willing to learn, but
I'm sure
just
there's
from
something you could
experience,
do with like the open interest numbers and the volume that trades. Or there's something there.
yeah, we have a lot of sharp viewers here, by the way. And as we teach, we learn. That's why I continue to do this. One of the greatest thing I did was start coaching. I've learned more from it than I can tell. Um, but my guess is 50% of the volume is intraday trading. And that incorporates market making, has to take the other side of any market order, right? Um, Day traders, prop traders, that's because they trade a lot of volume. The institutions like indexed type institutions come in steady. They're buying all the time. They don't get short, but they're not doing a lot of volume every day. But they hold. So I'd say 50% of it is short term, maybe
Yeah.
even up to 62.5.
One more question for you from JD. Coach Paul, have you ever done spread trading? Any resources for that type of trading?
Yeah, I have done spread trading, and we can spend some time on that. Yeah, there's an old saying: the big traders on the floor come and go, but spread traders grow old in the pit.
Hmm.
It's a lot less volatile, and it's an easier edge.
And outrights.
But
We
it's
hear Jack talk about that a lot.
but yeah, and it's, by the way, the biggest traders are spread traders. I could name some names, but I mean, in every market, there's spread traders, especially in futures, because you have different months. Um, Bonds was huge. You'd have not only have bond spread traders, they would trade 30-year against 10-year, 30-year tubs, fights. I mean, it goes on and on. So that, yeah, there's great spreading opportunities, but it's not as great on day trading because it's almost like a tanker moving in one direction. Spreads don't zigzag. And that's why a lot of people like them. one of the things that is changed in the spreading is in computerized trading. You have to be quick. There's an edge that's minor, so you have to buy a bid in one and sell an offer on another, and computers do that much quicker than a human can. But spread trading position, yeah, there's all sorts. Maybe we'll spend a day, but I mean, for day trading that we have here, um, traditional spreading, it's probably not a great place. But spreading gold against S&P, mm, I kind of like that. But I'm always out on the edge looking for another edge. So, but traditional spreading is great, but it's not great for day trading.
Good stuff. All right, we're gonna do a quick rapid fire here because Coach Paul did have a scouting report yesterday that mentioned natural gas. If we look at natural gas, pretty nice sell off today, down about 5%. Rapid fire through this chart. Where did the volume start to come in? Right around the same time it did when we were hearing all the energy stuff in crude oil. Really nice sell there. Coach Paul, another great call under that 200 moving average. Saw some volume start to pick up. I mentioned something. I don't usually do a scouting report, but the 30-year bonds were approaching that 200 daily moving average, the high of the range today. Why are we doing this? Did I take this trade? No, I can't take. And I think what I've realized, Coach Paul, doing this session, uh, we miss more great trades than we could even take. And sometimes I find myself taking the shitty one, and I'm like, wait, you did the analysis on this. Why was this a good opportunity? Why was natural gas a good opportunity? Why was the euro a good opportunity? You know, it's all the same technical setups, and rejecting at this daily 200 moving average, which we've done a couple of times in this 30 year, made it a decent trade for the day. Now, our job as traders is to identify opportunity, take advantage of those opportunities. So when you see it, click effing button and manage your risk. And manage your risk. Thank you, Coach Ray, as always. Coach Paul, you got
Yes.
anything before we go?
Um, Boy, it was a great session today. Enjoyed it. Um, Still, as always, focus on your process, um, control your risk, and thrive. So hit the like button. Thanks for stopping by, Coach Jay and Coach Hoop. And boy, now you got me on the spread.
You see
Maybe
what you
we'll
see
do
what
a
you did, JD?
session
JD's always
just on
asking these.
spread.
He's always asking these questions. They're great questions, though. We love it, JD. Keep bringing them. And
Yeah.
maybe we will set up a Coach Paul Discord session about spread trading, or we mention it here. Thank you, everyone, for joining today. Andrew, thank you as always for helping us run this segment and sending over questions to us. Chat, thank you all for asking great questions. It's the reason why we can run this show. We do have Coach Hoop coming up with a class in Discord in about 8 minutes. And Coach Ray and Coach Vince, 6 p.m. and 7 p.m. Central Time. Of course, Dakota with slow markets at 7:30. I will be joining Coach Dakota. We will be talking about his combine counter, I'm sure. And then we have Aaron with the London Open, 1:30 Central Time. D with the Euro Trade, 3:30 a.m. Central Time. And we are back for opening call tomorrow at 8:15. That's Eastern Time. 7:15 Central Time. Thank you, everyone. Have a great rest of your night. Trade well, manage risk, and we will see you all tomorrow. Bye.
Bye.